I think I slightly changed the topic in a way that I did not coordinate with President Liu, but we really talk more or less same topic, but a slightly different perspective. So I will focus my 20 minutes discussion on global growth, divergence, and drivers. I think I think you almost got there, but you ran out of time. Yeah. So basically, that more recently, that the IMF and World Bank slightly revised up of the global growth for this year and for next year. I think the major upward revision applied to the U.S. and to China. Okay, U.S. actually, if you think about the previous forecast by the IMF was something 2.1%. The IMF believed that the U.S. would hit 2.7% for this year. 2.7% real growth for the U.S. is a strong growth. Okay, I think it's very clear. The World Bank actually, the World Bank forecast was much lower for the U.S., 1.6%, and again, World Bank uplifted its forecast to 2.5%, almost by 1 percentage point. And China's growth is revised up to 5% by the IMF and also revised up by the World Bank. I think that this is the most recent forecast. I think you can tell from here. Really, if you think about it from a market perspective, I practiced market for 20 years. The market worried so much about the U.S. recession last year. Over 90% of the economists, I believe, in the market saw the U.S. would head to a recession. Today, we'll talk about the AI. I think there was interesting debate in the morning. AI, of course, is very important, useful. But if we will use AI models to do the forecast of U.S. GDP growth for last year, the AI would tell us with 100% probability, U.S. economy would head to a recession. Why is that? Whenever the Fed hike interest rate by over 5% in a short period of time in history, when the United States was founded, U.S. economy will always head to a recession, no exception, and within 12 months. So this time it's different. U.S. did not head to a recession. And so in a way, use big data, AI, all the model would prove to be wrong. What went wrong? Of course, that I think that as economists, we talk about this time is different. Okay, I will tell you what's the difference. In terms of the economic growth divergence, I think that President Liu compared so many countries. So I would focus on a number of countries, mainly a few developed countries, and and China, including U.S., U.K., Germany, Japan, and China. So if you think about the growth rate, especially since 2019, China did very well in 2020 and 2021. And 2022, that's the China growth. In 2020, of course, the COVID hit the global economy. China was the only large economy that managed to have a positive GDP growth. Okay, I think every other country had a major recession of some sort. And then China's growth steadily going up. That's the growth curve. If you look at the United States, U.S. suffered in 2020, but other countries in terms of growth, Japan, Germany suffered, and the UK suffered even more. But then if you compare the growth, all the curve to 2023 up to 2024, US outperformed everyone else. Okay, this is the US curve. I think that one country really did so badly is Japan. This curve is Japan. Okay. So I think that there are two interesting observations. Virtually, I think most of the countries recovered from COVID. Most of them, I think. If you use 2019 as 100, okay, as base year, say, what's the performance? Japan, of course, is an exception. Japan is always an exception for the last 30 years or so. Okay, so you always need to take Japan out. However, for all those economies that recovered from COVID, I think that if you compare the growth rate or GDP size, Using, again, 2019 as the base year, 100, I think that the US did the best. Every other country's performance relative to the US is worse. No one did better than the US. Let me put another way, okay? Since 2019, the US share of world GDP increased by almost 3 percentage points. Every other country's GDP share to the world, every other country shrink. That's the divergence. Okay, you really will think about divergence, that's the divergence. Okay, that's a very important divergence. We should pay a lot of attention. So basically, that of course, that if you think about what happened, behind that, because I also try to figure out what are the drivers behind it. Of course, that different countries facing different business cycle or financial cycles. Okay, and here we compare the U.S., China, and Japan. I'm not sure you couldn't see here, but in that screen you can see more clearly. But the US, of course, is still in financial expansion phase. China, of course, has been pushing for financial deleveraging for the last few years. Japan is a totally different phenomenon. Okay. Of course, if you, what I use is a market exchange rate. I measure every country's GDP in dollar terms. So dollar play a very important role here. That is since 2019, especially since 2022, virtually all currencies devalued against the US dollar. Japan, again, is a very different case. Japan devalued massively. Now yen over $2, hit over 160. Okay, I think it's a really mess. But all developing countries' currency, developing country currencies devalued in a way. So this figure on the right side showing that other countries' GDP size relative to the US, pretty much every country's GDP size shrink to some extent. Okay. So this is the macro. Okay. Now we talk about the market. The market would reflect what is the macro, performance or the divergence of the performance. So here, I think that if you think about the market performance here, I think that technology plays a very important role. Because I was thinking about what I would say about AI. Also, I think that AI again play a very important role here. So in terms of this is by different asset class. I think that Nasdaq outperform. Okay, of course, better than Nasdaq is Bitcoin, is right. A risky asset related to technology investment outperform other assets. So this is, of course, another way to think about the financial market, which is you compare different markets. U.S. market outperform other markets. Okay, because in a way the AI all this is more related to the U.S. economy. So in a way that President Liu already mentioned the U.S. monetary policy. So if you really think about the drivers behind the divergence, one dimension, of course, is on policy. That's on the U.S. side is easy monetary policy and the easy fiscal policy. Okay, I think that's quite clear. In terms of the easy monetary policy, since COVID, I think that before April 2020, U.S. didn't do anything. President Trump said that that's just the flu. We just ignored it, right? And then the market became panic in March, and actually in March, the U.S. market had a 4 times short circuit and were forced to shut down, right? And then from April onward, the U.S. started to massively easy its monetary policy and fiscal policy. The right side shows the quantitative easing, okay? This is the Fed balance sheet. In order to cope with the 2008, 2009 financial crisis, U.S. implemented 3 times of quantitative easing, so QE1, QE2, QE3. So in total, the U.S. balance sheet expanded by about $3 trillion over a 5-year period, $3 trillion. So in 2020, from April onward, U.S. started to expand its monetary policy by expanding the Fed's balance sheet over 6 months. So that was the last time was a 5-year, 60 months. now 6 months, the US balance sheet was expanded by $4 trillion. So over 6 months, the US did more than over 60 months to cope with the 2008 financial crisis. I think that's astonishing. That's amazing. I would tell you what will be the effect. Related to that, of course, U.S. Massively increases the deficit. Okay, President Liu mentioned about that. So basically, during the COVID period, U.S. households receive fiscal transfer from the U.S. government in total about $2.8 trillion. And President Liu talked about that. $2.8 trillion fiscal transfer from government to household, So I think and of course the U.S. deficit from April 2020 to let's say to April 2021, because I want to measure 1 year period, 12 months, year on year, the total deficit increased by $6 trillion, over 20% of U.S. GDP, 1 year GDP, right? That's the magnitude. So that, of course, played a very important role to support, to stabilize the market. That also laid the foundation or the cause for inflation down the road. Okay, I think we talk about this inflation. But we need to pay more attention in addition to inflation. That is, if you think about it, where the money went for consumption, of course, $2.8 trillion. Where else did the money went? Well, I think the U.S. massively invest in manufacturing, mainly related to chips, computing power, AI, all this. So if you look at the right side, the magnitude of U.S. investing in manufacturing is something we have never seen before. Maybe the last time was, in 1920s, when U.S. was starting to basically ride on that train of the second revolution in industry. So I think that's something we should pay a lot of attention. So it's not just a monetary phenomenon, inflation, and it's something much subtle. Okay. So if you map this to market, what would the market think about this? Market love it. The only darling in the market is AI and AI-related technology. So that's if you think the market is right, but the market sometimes got it wrong. So far, that's the vote. That's the vote with money. Okay. So I think that we also need to say something about China. But I want to make a disclaimer that is, I'm not speaking on behalf of PBOC. I think that's something that I want to make clear. So I'm speaking on behalf of myself as a scholar, okay, not as Tsinghua, because Tsinghua sometimes disagree with Fudan. That's not a good thing. I hear you say that Tsinghua and Fudan should agree, because I know, Zhang Zhen, leading economist, will say something. I will always agree, is right that Tsinghua should agree. So here, of course, if you think about China's monetary and fiscal policy, in comparison to the United States, it's very different. China did not run, massive monetary easing. No China, raised its deficit that much. Okay, I think that's President Liu already mentioned. What's really astonishing is really last year. Okay, why last year U.S. did not have a recession? Now I tell you the true reason as an economist. Reason number one, remember that there was a huge amount of physical transfer to the household, $2.8 trillion. Those transfer is become saving in the bank's account of ordinary households. Many of them are poor, middle class, or probably even, it's not the middle class. By the end of last year, they have not spent the money yet. That's why this time is different. When the U.S. was start to face inflation previously, the Fed, when the inflation coming up, the Fed will hike interest rate aggressively. If the Fed really want to, aggressively hike interest rate, say over 12 months period, 500 basis point, the U.S. economy will plunge into recession immediately within 12 months. No exception. AI will tell you, big data will tell you, all the history will tell you. Why this time is different? When U.S. was facing all the previous problems, U.S. never had this kind of saving in the household. So that's one difference. That's something that we really need to think about it. Of course, that another difference is really that last year U.S. was fighting inflation. The Federal Reserve was acting very aggressively, hiking interest rate. What was the U.S.'s deficit level of last year? 5% of GDP. If you think about an economy, Professor Zhang, you know this, is fighting for inflation. You want to tighten fiscal policy. So your deficit should come down to like 1%, or maybe even you want to get some kind of surplus, is right? What U.S. did? 5% of deficit last year. So you add in 5% deficit for last year, and also with whatever was the savings, that was the fiscal transfer. That really supported U.S. growth for last year and into this year, okay? Think about China. China was fighting for low growth, let's put it that way. Or if you really want to use the word, some kind of deflationary pressure. If you look at the National Bureau of Statistics report, China's GDP growth in real term, 5.3%. In nominal term, 4.7%, something like that. That means that in nominal term, China was facing some kind of deflation. So China was facing deflation. What was China's fiscal policy? What was China's deficit level? 3%. Okay? I think that by now you all understand the difference between US and China. The difference behind the divergence, that's where we need to understand. Fiscal monetary policy. How is China's market doing? Not so good. Okay, I wouldn't want to elaborate more, but I hope that Professor Zhang can say more about this. Okay. I always leave more difficult questions to Professor Zhang. Yeah. So this is the China monetary and the fiscal stance. Very different. Okay. So I think that so really, I want to provide as economists two additional dimension of perspective. One, of course, we think about the inflation expectations. So in a way, we're using Milton Friedman's perspective. China's real interest rate is very high, much higher than the U.S. is, right? Why U.S. was facing inflation? Look at the U.S. real interest rate. Since 2020, pretty much in negative territory, hugely negative, I think. And even now, the U.S. real interest rate is very low, okay? Let's think about another perspective, okay? This is Friedman was the Keynesian liquidity preference, 流动性偏好. That's the Chinese market. The Chinese market implies huge risk premium. The U.S. market, the risk premium declines so much. So real interest rate is so low, and the risk premium is so low. That's explain exactly why U.S. market is doing well. We perfectly. I think that this is almost like an Econ 101. So after now, you all become expert on U.S. economy and China economy. Okay, so if let's say U.S. want to tighten, who can do or will do the tapering? Of course, that's fiscal. But the Fed is already hiking interest rate and also shrinking its balance sheet. But as I told you, last year U.S. deficit level was U.S. deficit was over 5% GDP. This year around 5%. And I think that when Trump becomes the president, every year U.S. deficit will be over 5%. There is no fiscal conservatism from the Republican Party anymore. That's something we really need to pay attention. I think that President Liu said something very important. We need to think the world as a system, okay? So some countries produce, some other countries consume, okay? Some countries tighten the bill, other countries loosen the bill, is that right? U.S. will continue to loosen the bill regardless of who will be the next president. Okay, I think that's something we really need to pay attention. Republican Party is no longer the Reagan Republican Party. Okay, China, who can expand, or who will expand? I don't know. Who can expand? Okay, it should be fiscal authority. Monetary couldn't do much. The nominal interest rate is very low. How much more can PBOC do? Of course, I'm not speaking on behalf of PBOC. So I think that I'm not speaking on behalf of PBOC, but I think PBOC is facing many, many challenges, okay? So I will welcome opportunities to defend the PBOC if you really want to criticize PBOC. Thank you.